Christmas comes early with the new head of the FTC for tech.
It's probably the best way to sort of measure this is what Bitcoin's doing, because Bitcoin faced enormous regulatory burdens over the last few years, and now we have a White House that's embracing digital assets, a new SEC chairman, FTC chairman, a new Commerce Secretary. I think these are actually being viewed as pro-business, but I think a good proxy is watching Bitcoin.
All right, now I'm going to have to pin you to a target again on Bitcoin, because, I mean, you've been among the most optimistic and outspoken about it for years, to be quite honest. So here we are, above 100,000. What's a legit target for 2025 for Bitcoin?
We think it's going to follow a similar halving cycle that we've seen in the past. That would imply something around 250,000 for Bitcoin in 2025. And on top of that, we have a Trump put because Bitcoin is potentially a strategic reserve asset for the U.S. government.
Financial analyst and Bitcoin bull, Tom Lee, discusses his prediction for all Bitcoin investors and why he believes $400 trillion is about to pour into Bitcoin. After the Bitcoin halving earlier this year, which Lee says marked the beginning of an absolute surge in price, we saw multiple all-time highs for Bitcoin. Bitcoin is currently sitting just above $102,000, up over 13% in the past month. Lee believes Bitcoin is about to make history, as we witness one of the biggest price rises so far since the creation of the dominant cryptocurrency. The story has become even bigger in 2024 because of the Bitcoin ETFs, with thousands of institutional investors across the United States now buying Bitcoin. The demand for the leading digital asset has increased exponentially and more than the daily supply. This has caused a never-before-seen supply-demand imbalance for Bitcoin, and Tom Lee says everything is about to change. Don't forget, our partners at Jamie Tree Finance have launched a daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free, which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 5,000 others in becoming a better crypto investor right now.
I'm a believer in Bitcoin. We've recommended it for our clients for more than 8 years because we do think it's an important asset to have exposure to. Our original recommendation was 1%. You know, today, for newer investors, I would recommend 2 to 5. The U.S. government itself is talking about making Bitcoin a strategic reserve asset. And I know there's some pushback for a couple of reasons. One is, you know, Bitcoin is harder and less tangible relative to a hard asset like gold. In the U.S., holdings of gold is actually around $660 billion today. It's actually carried on the balance sheet at 1971 cost, so it's carried at $11 billion, but the U.S. has $660 billion worth of gold. Bitcoin is trading at 10% of the network asset value of gold today. So it's a $2 trillion asset versus gold at $20 trillion. So I would say if the U.S. was just trying to diversify its, currency holdings, they should own 60 billion incrementally of Bitcoin at least. But I think it's a very interesting question because I've heard a lot of people weigh in that if the U.S. starts to own Bitcoin as a reserve asset, that it would affect dollar dominance. The one thing I would just point out is that in the digital assets world, when we look at crypto pricing, the dollar is by a country mile a bigger reserve asset. Almost all the stable coins, I would say if you look at stable coin dominance, it's 90% dollar. So in a digital native world, the dollar is more important than the euro, the renminbi, than the yen, the won. The only currency people really quote crypto assets in is USD. So I think if that's a proxy, dollar dominance would actually be bigger in a future Bitcoin world.
What would your asset allocation recommendation be for a young couple with a little bit of money that wants to start investing right now?
I think one of the key words that you said, Scott, was young. I think when someone's young, they have time on their side. A young person, let's say someone in their 30s, has 60 years on their investment horizon. And that is a huge, huge advantage because most people who invest only think 1 month ahead or even 1 day ahead. So there's a couple things I'd offer advice as. Number one is over the long term, the ups and downs of the market matter less because everything that has growth grows in value. So I think equity should always be a big part of someone's allocation, but that also should include real estate because land has a good history. And of course, owning Bitcoin or gold or both. The second thing I would just note is the importance of dollar cost averaging. I think many people feel anxious at the top that they have to put all their chips into the market. They don't. They should have a program to invest steadily. And so we always advise dollar cost averaging. So whether that means you make a commitment to buy every month or you buy every time there's a dip, I'd really recommend people dollar cost average. And the third piece of advice I'd give people is that they need to be really patient. And as much as someone thinks buying at the top is dangerous, JP Morgan's private bank has a very famous chart that shows if you bought the S&P only at all-time highs, you actually had better returns than dollar cost averaging in general, meaning it's actually okay to buy at all-time highs because you know you're in a bull market. Of course, there'll be one day when you actually bought and it literally is the high. But if you have 20 years, you never had a negative rolling 10-year period. So as long as you own something for 10 years, you don't have to worry about buying at the highs.
Embracing an unyielding enthusiasm for the Bitcoin realm, Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits as we head into 2025.
As we look forward to 2025, I think that the fundamental visibility is much better than it was at the start of 2024, meaning we have a Fed that's dovish, and I'd consider that, a Fed put. We have the election behind us, which was really a source of angst in 2024. And the incoming president is very pro-equities. So I'd call that a Trump put. That's a tailwind. We know businesses have been cautious for the last 2.5 years, plus the inflation wave, plus a Fed that was trying to quash inflation. So I think animal spirits return. So these are the tailwinds that are positive for equities in 2025. I think some of the initiatives have a lot of positive potential. Others carry with it risk. On the things that carry risk is how the economy will be affected by mass deportations if that happens. The notion of tariffs. Tariffs can be an important tool, but tariffs can be very disruptive to a global economy. And then there's also DOGE, the Department of Government Efficiency, that I think if we were in a crisis moment, DOGE could be extremely effective. But at the same time, tackling government spending is something that I think is extremely difficult and fraught with visibility risk. And I think it poses risks for companies that are big government contractors. So that's what we have to watch. And then the other thing I think that really bears watching is Bitcoin, because I think there is a lot of policy that's being built around Bitcoin finally being more accepted, the sandbox changing for Bitcoin to be something that the US government potentially embraces.
Tom Lee challenges the conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Lee asserts this journey is just the beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Lee highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Lee also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Tom Lee? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?